Oh, yes. You're welcome to my online training class. I want to discuss with you today Isaca IS Audit and Assurance Standards. My name is Akinwale Akindia. I passed the CISA examination in 2007. That is a long time ago. And I was able to score 604 over 800. That was, quite top notch at that time. And since then, I have been teaching CISA candidates in Nigeria and outside Nigeria, thanks to technology. I've been able to train CISA candidates from all over the world. I've had candidates in America. I've had candidates in Uganda. I've had candidates uh, even in Middle East, in UK, and so on and so forth. So I've been around quite a while. So I want to be sharing with you Isaca IS Audit and Assurance Standards. Now, the auditing standards are very, very important because of the importance of audits and the challenge of audit risk. Of course, you know audit risk by now. Audit risk has three components. You have inherent risk, you have detection risk, all right, then you have control risk. And so detection risk is the risk that the auditor is going to make a mistake or a misjudgment or be negligent and not discover what he or she is supposed to discover in the course of the audit. So, and of course, the auditor can get sued. You can Google auditor's liability. You see the auditing firms getting sued, right, by uh, stakeholders for negligence. So if you want to keep safe, you have to know the auditing standards. So the auditing standards are mandatory requirements, no negotiation. You can negotiate them away. So as a professional auditor, you ought to know the standards by heart so that in the course of the audit, you follow them, then the auditee will know the standards by which to hold you accountable. Those are the benefits of auditing standard. So the auditee knows the expectation they should have about you professionally. That even you yourself, you know the standard that the profession is expecting of you. Yeah, I always tell my CISA candidates that these auditing and assurance standards is the summary of CISA. Honestly, if you understand all the standards, you cannot fail the CISA examination. That is the truth. I can vouch for that. If you understand all the standards, that is the summary of what CISA is all about. All right. So the Isaca IS Audit and Assurance Standards, they are divided into three sections. All right. So you can see the general standards, then we have the performance standards, then we have the reporting standards. Those are the three classification of auditing standards. So we start number 1001, audit charter. What is that standard talking about? Audit charter is a document that is used to transfer authority, responsibility, all right, to the internal audit function. Naturally, auditing is the responsibility of the board of directors, but we all know they cannot be running around. How many times do they meet in a year? All right. So they cannot do that operationally. So the internal audit function was created to be responsible for that function while the board of directors become accountable. All right. So the board of directors is accountable for auditing, while the internal audit function is responsible for auditing in the organization. Now, to show the seriousness of audit in the organization, the board of directors is going to have a document where the powers, the responsibility, the authority, the scope of the internal audit function will be defined. And that is what we call audit charter. Don't mistake audit charter with engagement letter. They are not the same. Audit charter is for the internal audit function, while the engagement letter is the contract between the external auditor and the management of the organization being audited. Okay, and sometimes we can look at engagement letter even for internal audit function, especially for specific audit engagements. Okay, we've been told to go and investigate a fraud. We've been told to go and do an application audit. Then we need an engagement letter specifically telling us what to do, what the audit is all about. All right. So please take note of audit charter. There could be questions in the exam on audit charter. So it is the document that transfers authority to the internal audit function. 1002 organizational independence. What does that mean? The auditor should not do self-review. You should not audit yourself. Okay, so you are the developer of an application. You should not be involved in the audit of the application. You are involved in the system development lifecycle, domain 3 of CISA. All right. If you have been involved in any of the processes, talking of feasibility study, requirements gathering, requirements definition, design, development, implementation. Now, you cannot be involved in post-implementation because that means you are leaving your own work. So the auditor should not be placed in a situation where he or she is reviewing his or own work. That is what we mean by organizational independence. 1003, professional independence. What does that mean? The auditor should, in mind and in appearance, avoid anything that will make an objective, observer to conclude that the auditor is not independent. That is a topic for a whole day, on its own. There's so many things that can compromise the independence of the auditor. For example, look at area of relationships. Okay, relationships. You are a partner in an audit firm, and you are going to audit a particular company, maybe a PLC, public company, and by the time you get details of the organization, discover that maybe your best friend or somebody you went to school together, or somebody in your church or in your mosque or in your social social club is one of the key directors. So, that can actually affect the audit because of personal, we are all social agents, social beings. So because of that, it can affect the audit, or the audit firm has investment in the auditee. How do or you are doing joint ventures with the auditee, or one of the directors in the company you're auditing is married to one of the partners in the audit firm. So all these are things that anybody that hears about it would doubt whether the audit is going to be reasonable, whether you can expect anything reasonable from the audit because of the independence. So the auditor should have, a mind of objectivity, a mind free of bias, all right, and also be careful to project that independence in relationship with the auditee. What about the issue of gifts, material gifts in the course of the audit? So they are taking you on vacation, they are going for their, maybe they want to do end of year party, and they're flying everybody in the audit team, lodging you in, you know, high class hotels, take care of your feeding, take care of your, even give you some envelopes at the end of the day. These are the things that the 1003 is saying that you need to be very, very careful for the audit to be objective. Okay, 1004, reasonable expectation. There is no perfect audit anywhere in the world. Audit, has its limitation. For example, time. You have audit is time limited. Okay, 3 weeks, 4 weeks, the audit is completed. Okay, and so you use 4 weeks to review the work of 1 year. So that limitation is there. But despite that limitation, the auditor must plan the audit, execute the audit, and develop the audit report in a way that an objective reviewer of the work of the auditor will be able to have reasonable assurance that the audit opinion is valid. So that is related to 1005, due professional care. If we are going to have reasonable expectation in the work of the auditor, then there must be due professional care. Plan the audit carefully. Don't take a job you are not qualified to take. Have supervision. That's why I like ISQC1. All right. That is International Standards on Quality Control 1. You need to download that standard. Just Google it. It is a standard that every auditor must know about. ISQC1. Talking about the professionalism, talking about the training, talking about the quality control, talking about leadership, talking about supervision, talking about reviews that you need to put in place when you are performing an audit. Please Google ISQC1. It's very, very relevant, even though it is more of relevant for financial audit, but trust me, it is very, very good even for IS auditor or environmental auditor, whatever kind of audit you're doing. ISQC1 is very, very relevant. Okay, 1006 is proficiency. What do you know as an auditor? What is the level of skill you have? Okay, so you need to have soft skills, you need to have technical skills. All right, sometimes you have to, manage people to get information, because without information, without evidence, you cannot make conclusions. So you have to manage, IT, you have to manage the auditing management, those charged with governance, even your own team, you have to manage them. So you need to have soft skills, human management skills. Then you need to have technical skills. What do you know about data analysis? What do you know, all right, about database management? What do you know about programming? What do you know about ethical hacking? Okay, what do you know about artificial intelligence? These are the challenges. The auditor is a technical guru. The IS auditor is a technical guru. So you need to be able to get your hands dirty and prove yourself that you can do this job. 107, assertions. Assertions are made by management. All right. And those assertions might be valid or might be invalid. Let me give you an example. When you take a balance sheet or statement of financial position, as an accountant to call it now, using IFRS. So you see non-current assets. The under non-current assets, you have plants, property, and equipment, PPE, $6 million. That PPE, plants, property, and equipment, $6 million. There are a lot of assertions about embedded in that single statement. Let me give you one. Existence, assertion. There is an assertion that those PPEs are actually existing. They might not be existing. It is the job of the auditor to validate, to inspect, and cite those properties that indeed this property is existing. That's valuation. That's existing assertion. All right. Then you also have valuation assertion. PPE $6 million. It might not be $6 million. It might not be worth more than 500,000, or it can be worth more than $6 million. Maybe they made a mistake. That could have been on the understatement, or that could have been an overstatement. Valuation assertion. It is the job of the auditor to confirm the valuation of that PPE. All right. What about occurrence? Occurrence assertion. We are assuming, because we saw the $6 million in the financial statement, we are assuming that transactions actually occur that led to that balance. It might not be true. There could have been creative accounting. Somebody could have just write something there to just, make up the books. So the auditor need to check occurrence. You need to check source documents. You need to check postings in the systems to be able to confirm that the assertions are correct. Okay, what about cutoff? All right. What about the cutoff? Cutoff means we look at the accounting period, the period under audits. Okay. Some of the PPEs could have been acquired maybe in subsequent years. All right. Maybe we are looking at the audit of 2019. All right. And some of the properties were acquired in 2020, and they have already matched those PPEs, those properties, with the properties acquired in 2019. Then there is a problem there. All right. So that means there is a cutoff. Then the financial statement has been misstated materially. So the auditor need to gather evidence to confirm the cutoff assertions. So what I'm saying is, anytime you are auditing and you are giving anything, you need to ask questions. All right. You cannot you need to have what we call professional skepticism. You can't take anything the auditor gave you, hook, line, and seeker. So you need to verify, you need to validate or invalidate. That is assertions. 1008 is talking about criteria. I love this. So when auditors make assertions, professional auditors use criteria to check or test the assertions. So, for example, COBIT is a criteria, it's a best practice, it's a framework. So COVID 2019 can be used to validate or invalidate an assertion made by management. ISO 27001 on information security management system can be used as a criteria to determine whether best practices are occurring in an organization. If I want to do business continuity audit, for example, I can use ISO 22301 as a criteria. If it's a financial audit, what criteria will I use? I will use IFRS, the National Financial Reporting Standard. That is the benchmark when it comes to financial statement preparation. All right. So the auditor must be a custodian of criteria so that you will be able to check what the auditor has done with internationally accepted best practice. Okay, so we look at the performance standards. What 1201 engagement planning. You don't rush into any audit. All right. I remember there was an audit I turned down some time ago. I think they called me maybe on Thursday and they told me we'll be on site on Monday. I said, no, I'm not coming. All right, because what are we going to do? And later I was proven correct because the audit objectives kept on changing. In the beginning, they said this was the objective. Another one, they said this was the objective. And so at the end of the day, we could not agree on the audit objective. So why would you go for an audit when you don't know the objective, you don't know the scope, how many applications will be covered, how many years are we looking at? How many departments are you going to look at? So you need to have your objective settled. You need to have your scope settled. Then you need to be able to look at the audits. All right. What are the applications involved? What are the technologies involved? What are the business processes involved? Have you had experience in that particular area before? What kind of skills do you need? What kind of experts do you need? What kind of software tools do you need? All right. What is the industry? What are the laws in that industry? For America, when we have health-related industry, health-related business, we are looking at HIPAA. Okay, HIPAA, Health Insurance Portability and Accountability Act. Okay, you are looking at banking. So we are looking at things like PCI DSS. We are looking at BASU 3 and so on. So all this knowledge are very, very important when you are planning for an audit. 1202 risk assessment and planning. So when you are planning an audit, you need to keep your eyes open for areas of highest risk. If something will go wrong in the organization, where will it go wrong in a way that can bring the organization down? So it requires an end-to-end analysis of the business. So you need to understand the business processes so that you understand that this organization, this is the area. Pareto rule, applies. So you need to major on major, you need to minor on minor. You can't do everything in any audit. You have time limitation, you have cost, you have resource limitation. So because of that, you need to be able to know where to go exactly. And it takes experience. It takes, asking questions. It takes, doing background check of the industry, of the organization to know where exactly to focus your audit. All right, 1203, performance and supervision. I've talked about ISQC1. You don't just go for audit and just do shabby work. So you need to have a standard of the level of performance or quality you are going to hold your staff, your team to. All right, so you need to be able to be careful in your selection. It starts with selection. What is the qualification of your auditing? What is their experience? What are their skills? All right. Then of course you must have a high level supervision, checks and rechecks, review and review. All right, to be able to ensure the quality of the audit work. 1204, materiality. I've said that you don't have the time to audit everything, so you need to have a threshold, which most of the time is determined by size of the transaction and nature of the transaction. Now, don't be deceived by size. Sometimes some transaction may look immaterial, but when they combine with other immaterial issues, the effect might boomerang into something serious in the organization. And like I always tell in fraud classes, that fraud has signals, and sometimes the fraud signal might not be so material. So the auditor must have the knowledge to look at size of transaction, but also to look at nature of the transactions so that it does not overlook certain issues that look immaterial, but they may have material consequences. But most of the time, we actually use amounts, all right, relative to the auditee's environment to determine what is material. But as a professional, you must be conscious of the fact that there could be certain, immaterially looking transactions who could actually have material implications. All right, 1205 is talking about evidence. You can't write an audit report without evidence. So once you know the audit objective, you know the audit scope, you need to gather evidence before you can write a report. And the evidence must be sufficient and appropriate. Sufficient is talking about, do you have enough evidence? Appropriate, do you have qualitative evidence that can stand scrutiny? That's appropriate. All right, 1206, using the work of other experts. A lot of time you have to rely on experts. IT is very broad, okay? So you have so many areas of specialization, and you cannot do everything. You cannot know everything in IT. It's not possible. So if you are auditing a specialized area, you may require another expert to assist you or to join you in the audit. But be careful. You cannot write in an audit report that it is the expert that said this. It is your work. You are accountable for the work of the expert. So if the expert give a wrong conclusion, then it is your conclusion. You are accountable because you are the one that chose that expert. So before you choose an expert, you need to look at the background of the expert. What is his qualification? What are his credentials? What association does he belong to? What books has he written? All right, all those considerations. And of course, you need to look at the independence of the expert. What is the relationship between the expert and the auditee? 1207, irregularity and illegal acts. Traditionally, management is the one that has the responsibility to discover fraud, not the external auditors. Take note. But now, the external auditors too can be held accountable if they discover that they did a shoddy work and that they are fraud that they should have discovered if they had opened their eyes. All right, I've done a lot of study and I've done a lot of training on auditors' liability, and you see so many cases that audit firms get sued or get fined or penalized for. Okay, so there was a case, for example, another firm was fined because of inventory overvaluation that was not discovered. And to the regulators, they believe that if the auditors had planned their work very well, they should have discovered the overvaluation of irregularity. So as an external auditor, you cannot no longer hide under the fact that it is management's job to discover fraud. You are expected to also plan your audit work in a way that if there is fraud, all right, you will discover it. Then we talk about professional skepticism. So you always have to be alert that something funny may be happening in the auditee environment. Okay. Then the last two standard is reporting 1401. So like we said, you have audit scope, you have audit objective established, you gather evidence, then you write your report. All your reports must contain all the significant findings, and all your report must be based on evidence. Everything you write on your report must be traceable, must be verifiable. All right. And 1402 is talking about follow-up activities. So you don't conclude an audit and say bye-bye, then you come back next year to start all over again. Then the exceptions you raised last year, they will still be the exception you are going to raise this year. That is not right. So once you have concluded the audit and you have done your exit meeting with the auditee, so you have made your recommendation, you must set a target date for the implementation of those recommendations. You have already done exit meeting with them, so they've agreed, they've accepted those exceptions are there, they've agreed on the recommendation to be implemented. So how many days, how many weeks will it take you to rectify? So once you have made that agreement, then maybe you come back maybe a month or 2 or 3, then to come and check that those exceptions have been closed. And if they have not been closed, then you need to be able to ask questions, what are the issues? So these issues must be closed before the next audit. So if you want more information about auditing and assurance standards, go to www.isaca.org/ITAF. Then you'll be able to download the standards. Okay, learn from an Isaca certification expert. I have CISA, CISM, Series, Seagate training videos. I'm an expert in Isaca certification courses. So you can send me a WhatsApp message on the phone number if you need my training videos. Thank you for watching. I appreciate. Subscribe to my channel for more training videos. Thank you.